Hello traders, this is Rich Derrick from Tradesight. Today we had a pretty much what I would consider a snapback session, returning back to the more positive trend that had been dominating the Nasdaq and the S&P side. The S&P minis were up 1250 on the day, and the Nasdaq futures were up 3775, basically just spanning uh, more or less the year-to-date range in the last 2 days. Well, take a look at the technicals in a minute, but we had pretty broad-based strength for the most part. We had oil up. We had the precious metals were okay, but there was really kind of a bid to stocks. The gold shares and whatnot that had been kind of a little bit of a safety trade were considerably weaker on the day, and also you can see here that the bonds were very weak. As far as the trade goes, I really think the Japanese yen and the currencies have been driving the bus. Currencies have been affecting the global trade. Global trade has really been dictating what's been going on overseas. So I really think that the this move in the Nikkei 225 has really been a tell. So let's make sure that we take a look at the Japanese yen a little bit and see what the condition of that is. And it is at this point very overbought and bumping into a key resistance area that we'll look at later. All right, now here's a look at the ES futures. You can see that we never really got that close in the qualification below the 10 EMA, so the short-term upward bias is still intact. Essentially, all we did was basically just take back what we lost the previous day. We actually settled very close to what we did on Monday, so we're kind of back up into that range. Keep in mind that we're just barely above this 8 ace level of 1500, so we're just very modestly overbought on the GAN box here. MACD is starting to lose some momentum since we've been sliding sideways here, so we have to really keep an eye on the MACD for some deceleration here and move down towards that zero line. So that's definitely something that we're going to be looking at again tomorrow night. So for now, we're still kind of gaming both sides of this 1500 level, and for now still short-term positive on the north side of our 10-day EMA. And here's a look at the Nasdaq futures. It's just amazing how we've been so boxed up this year. We closed down and made a new low close on the year yesterday. Still in this tiny little box, and today we went back up and actually closed just above the opening levels, or the best levels of the first trading day of the year. But needless to say, we're still just basically just tied up in this box with really nothing to show for it. Basically just range trading back and forth here, pivoting around this this fulcrum here in this trading range. So nothing new technically until we either break out above or below and qualify a move that exits this box. Now just keep in mind here that we've been in this box now for more than a month, so when we do exit this trading range, it should have some good punch to it. This is a very tightly defined area so far this year, and it's actually going to be one for the record books. This is a really tight area, and this is really amazing how many days of this year we've actually traded within the opening days range of the year. Now the next chart I want to take a look at is not stock related per se. It's the Japanese yen. The Japanese have really been making an effort to devalue the yen, and the central bank has been jawboning it, and so far it's been very aggressive, and the move has been really in favor of what they're trying to accomplish right now, which is weakening the yen. Let's talk about the technicals here. We had this breakout. Well, let me go back a little bit more. Let me scale this back here a little bit. We had this seeker exhaustion buy that you can see. We got this on September 13th of 2012. That was the low point and really proved to be an important pivot here. We broke out above the previous range and started making some momentum moves here. Here's one that can be defined by the 1 through 9 seeker setup. Here's a second one, 1 through 9 seeker setup. But neither of those produced the 13 exhaustion warning. Then we had this right in here, another one. But this one did in fact produce a seeker exhaustion warning. Never really had a chance to change trend. It never closed below the 10 EMA before taking out the risk line. So this was a warning, but never turned into an outright sell signal. But the important part is what's just developed now. We've actually had a new momentum move to the upside. 1 through 9 is complete as of today's candle, which closed at 5 o'clock. So the important part here is that we now have a 9, 13, 9. So we have a 1 through 9 setup phase, a 1 through 13 countdown, and then another 1 through 9 setup phase. Sometimes this second setup phase is necessary when something has a great deal of momentum to the upside, and that's certainly the case here with the Japanese yen. This never really broke the 10 EMA after our exhaustion warning. So now we do have a 9, 13, 9, and think of the second 1 through 9 here after the 13 as a reinforcement of the first one. So this could be very, very important. I expect that this is going to hold price in check here for a little bit. We may sweep a little bit higher, but this is probably going to wind up being a pretty good stopper on the weakness in the yen, at least in the short term here. So we've got to be very, very careful about that because of the implications for stocks. If this does stop, the Nikkei 225 will probably run into some headwinds here, probably see a little bit of profit taking, or at least arrest the advance for now. And that will have implications for the global equities, and that's why we're talking about this tonight. I've just rescaled the chart here for a moment, and what I wanted to point out was that on the Gann box, though, the 8/8 level is at par, is up all the way up at 100. So there is quite a bit of room here before we get to that key level in the Gann box. I kind of suspect that one way or another we're going to get there, but I have a feeling that the 1 through 9, the 1 through 13, and then the 1 through 9 reinforcement that we just talked about, the 9, 13, 9, is really going to weigh on this advance here. So definitely be ready for some leveling off and some change ups here in the market. I think the market's going to wind up being tested a little bit more aggressively here later on this week. So let's really be focused on the yen and how it's performing. So definitely want to keep on the watch. All right, now onto our market internals. The put call ratio is still kind of sleepy here, starting to creep up a little bit. We're far from a climactic reading, so we're going to cross this off the list of anything to worry about for a change in trend. And here's a look at the 10-day trend. This time, just for fun, I've overlaid it with the performance of the S&P, where you can see that these overbought readings definitely become inflection points, or at least leveling off areas in this. Right now we are a little bit below the midpoint, but we're definitely not at an overbought reading. We're only at 0.99. We got to get to this 0.85 area to get a reversal warning, or at least to get overbought enough to start thinking about a reversal based on overbought and oversold metrics. And here's the other important internal. Here's the advanced decline line. This is a cumulative advanced decline line, and what I wanted to point out was that we're starting to kind of struggle here a little bit. We had that pretty sharp break yesterday, but we don't have a divergence yet. We're definitely going to keep a close eye on this. This could be a lower high that we're setting up right now, even though we made a new high in the move, or in the area of a new high in the move. So just want to make sure that we don't start to get a divergence where the major indexes are making new highs, but this is not. Right now, this is okay. We're still kind of in that ballpark where we're still kind of essentially trading with the market. If the advanced decline line does start to roll over, then we're going to start to be really defensive and start to really bring up our stops on the longs and really start to look for some really nice rollovers in the broad market. But for now, we're okay here. Definitely going to keep an eye on this and see if this is something to build on now that we've got a little high watermark on the chart to keep an eye on as a target. Now, as far as some of our other key intermarkets go, the stocks is still performing okay. It did outperform the overall NDX today. In our ratio chart, made a new high here on the move, so that's good. Remember, we've got key overhead here, just a little bit higher, and that's going to be the real level that we want to see taken out to make the bull case stronger. And now the NDX versus the stocks on a relative basis is still in this sloppy downtrend. I think a lot of this still has to do with the performance of Apple, since Apple's so overweighted in the NDX. We did get a bump up today. We had a really strong performance out of Apple, but not really enough yet to qualify as a higher high here. We'll have to see what happens. We do have potential for that if we can follow through to the upside, but this still remains negative for now. Now, one of the little cause for concern may be the underperformance today of the oil services in the oil patch. Definitely underperformed oil on the day, and want to make sure that this doesn't turn into a trend. If this does turn into a trend, this is going to be a real problem for the broad market. Let's keep a close eye on this. Right now, we're potentially at a turning point here, but one day does not make a trend. We just have to see how this winds up playing out. So we're going to take a close look at this again tomorrow. Don't want to see the oil futures, which are the red here, continue to outperform the OSX in blue. All right, now on the day, the semiconductors were the best performers, so we're going to give them top billing in the sector survey here, pretty much just matching the previous high. The problem is that we're still unable to get through this plus 2 ace level on the GAN box. Of course, there's very bullish implications if we can take that out and then force a frame shift. But for now, we've not been able to do that. Trend remains positive. We're still above this rising 10 EMA. We're also above a rising 50. The 200 is still downward sloping, but we're above all three moving averages. Definitely an overbought territory. Got to make sure that this can hold trend and hold up positively, because this got so many implications in NASDAQ overall. The BKX, the other big NASDAQ, have to see if we can follow through here. All right, now here's a look at the BKX. Important feature here is that we've now broken above the previous high, which forced a frame shift, getting up to 56.25 now for the new 8 ace level. Trend remains positive. We made a new high close on the move here, so we've got to really keep an eye on this. The banks had really strong sector readings at about 3:30. The afternoon sell-off, though, did erase a lot of those. We had a lot of CPS signals to the upside in a video that you can view. That we're talking about the market leaders. Most of those did wind up getting negated by that afternoon sell-off, but we still had a pretty solid close, and it is a new high close on the move. Here's the BTK, the other big NASDAQ sector. We pretty much matched the old high. We're still bumping up against this 2 ace level. If we could break out here above and get a close above the 2 ace level, we'd get a frame shift here, and just having that fresh frame shift in the BKX on the broad market side, and then having a frame shift here in the BTK would be a nice positive development for the NASDAQ market. So we talked about earlier, the OSX did have a pretty tough day. We're really still struggling here with this 250 area, which is the 8 ace level on the GAN box. We're still above the 10 EMA, but this little area is potentially troubling. We had a little consolidation area. We broke out above that, hit the 8 ace level, and have pulled back here a little bit, unable to keep the advance going. Definitely want to make sure that we can hold these prior lows here at about 244.5, and also keep above the 10 EMA. If we can do that, maybe consolidate this off a little bit, then we can look for higher prices in that plus 1 ace level. At the same time, if we do level off here and can't really get going and start to just consolidate here at the 10 EMA, we could be loading the chart here with a very small head and shoulders pattern. So definitely want to keep an eye on how the next couple of bars develop. XAU was fairly flat on the day. It actually outperformed the OSX by a little bit. Still kind of pinned below all the major moving averages. Still a source of funds when the market lifts. So, key support here at the 150 area, which is the 0 ace level. Tend to think this is a little bit long in the tooth here on the downside and ready for a potential turn up. If we do see some downside activity in the market in the other sectors, keep an eye on the XAU. If the XAU starts attracting a bid and some money starts flowing into that, that could be a confirmation that we could have some kind of a trend change here. Maybe, of course, it would just start as short term, but this will be one of those confirming signals that you want to look to. And here's oil. Oil was just kind of slugging along here. We haven't really been able to get up here and print anything much higher than these recent bars. We're at candle number 10 on the Seeker countdown, looking for 13. So we've got 3 more days of potential upside here if they can get it done before we get that sell signal. So definitely keep an eye on that, and let's make sure we monitor how this develops. All right, folks, that's going to be it for tonight. As always, please feel free to leave a comment below. And this has been Rich Derrick from Tradesight, and hope to see you again soon.